Well, finally, we can actually do the presentation I've wanted to do for the Canadian Bitcoin conference. This, we had some glitches, but anyways, this is what's great. One thing's important to understand is this is an explanation of how I come to my conclusions. And what's great about this is being uploaded to YouTube. You can actually stop it and go over what I articulate. Okay. Now, most important thing is that this is for information purposes only. I'm no longer a financial advisor, but I provide consulting for people who want or are interested in a model specifically. Okay. So, what is the economic long wave? Let's go through what is occurring first. I think this all makes sense for you. Right now, and you'll get this story, we're in the contractive centralized fourth wave. This is undergoing a path to collapse because the inherent weakness permeating this foundation. One thing is I'm aware of, and I learned very quickly, is the audience is pretty much up to speed about the monetary system and how fragile it is, right? So the whole system is fragile because we've from a long wave perspective, we're hitting pretty much our limits to growth. The economy, the banking system, the monetary system, current leadership, the education, the healthcare systems are crumbling. They're not supporting the current economy in a productive way. But the good news is that we have this emerging Decentralized Renaissance, which will propel the next cycle. And it addresses all of the issues, which is exciting. And as I've mentioned, Bitcoin is part of that. But as Kondrativ always articulated, there is not a straight process. This is the beauty of the long wave, is that we have to go through this cleaning cycle, so to speak, to get to that point. And we call it economic winter. Okay. This is Kondrativ's fifth wave. And you can see here, to start off boldly, these are the technologies that are, as Kondrativ said, are built on or during the down wave, which we're in, and used in the up wave sometimes in the 2030s, sometime around that area. And it's the internet, smartphones, computers, quantum computers, solar, wind, algae. These are energy systems. Small scale nuclear. You can see molecular manufacturing, there's there, nanotechnology, fine tech, Bitcoin, blockchain, cryptocurrencies, 3D printing, robotics, artificial intelligence is amazing. So all these are technologies that are now in the emerging state that are going to power society in the next wave, right? And this is why I think, or I believe that they invited me to speak, was really, how do you put all this together, right? Bitcoin, blockchain technologies, cryptocurrencies are part of that cycle that will be driving. It's the whole system is causing the Kondrativ's fifth wave decentralized renaissance. Okay, I'll get into that more. Story. I think the thing is, you need to know a little bit about me. If you want to know more, it's on the website. But this story really starts in 1989, and as you can see here, this is Toronto real estate. And February 14th, that time, I bought real estate at the top. I was ignorant that I was buying into a bubble that was peaking, and that I didn't realize at the time started on me on a journey to build one of the most successful forecasting models in the world, which is unveiling as we speak. Now, in this same year, I started the investment business, so I got involved in wealth management. Now, what's challenging about wealth management is I learned very quickly is there's so many options, and I'm liable. Ultimately, I'm responsible for a client's assets. So it made sense, if that's the field I wanted to get involved in, I would want to learn from the best. So looking around, wasn't aware of who were the best in the world. And most people know Warren Buffett, but my mentor was actually John Templeton, one of the greatest value managers of all time. This is one of his books, as I recommend if you're interested. Can't believe that picture is 30 years old, but yes, it is. And great man. And at the time, he gave me some insights of the mistakes I made regarding real estate and value investing. And this laid the foundation. Because of my openness and my ignorance, the first 10 years in the investment world was really as a value advisor, as I would call it, right? We'd only invest clients' capital in cheap or out of favor investments, right? Wealth management is first a preservation of capital, then making money, not just providing a product or service. And that made sense. Now, what's interesting too about that time is that these value managers had no trouble holding 50% cash in a portfolio. I mean, that's unheard of today, but that's value investing. And if you can't find anything to buy, the markets are expensive, you hold a lot of cash. You just park it and wait for great opportunities. I mean, Warren Buffett is holding 128, 134 billion. What does that tell you? Can't find anything to buy. At the same time, I also met this great gentleman, Peter Kundal. There's a great book if you're interested in value investing, and it was the same principles. And so, my mentors of the time were great, gentlemanly scholars of value investing. Their concern was preserving capital. And, really this philosophy emerged after the Great Crash during the Great Depression is to, preserve your capital, then invest. So if we could find bargains, we would purchase it, usually at the bottom of the business cycle, and then profit from the return in earnings as the stocks would grow. In this case, let's say sectors or industries of the economy. It's very simple, makes sense. And the strategies worked very well, except for my dealings with compliance, because I was more actively moving assets where I thought the opportunities. But the bottom line is the clients won. And the most important thing is that these strategies helped me avoid the collapse in 2000 and 2007. We saw the markets were crazy, real estate speculation was rampant, a credit bubble was about to burst. So it was these strategies that made me cognizant of the dangers of, let's say, investing in an area. Now, I went for a change, or let's say things kind of changed because this book came out, and if you don't know, it's Harry Dent's book, The Great Boom Ahead, and that came out in the mid-90s, and it was very much revolutionary in terms of how he saw the future. And he was focusing on the demographics, and it was excellent because I built that into my own model. But the key was, for me, was a slight introduction into technology and how it powers societies. It was, because I don't have formal education in economics, but this thesis made sense to me. Oh, there are these cycles, and technology pushes them forward. And then too much unproductive debt and its burdens, it causes the end of these cycles. It was a very simple concept, and it made sense to a person like myself who's very curious. This then led to discovering Nikolai Kondratiev. That's a picture of him, and you see it on my website. Of course, it's not me. And this is his great book that started or began the processes of understanding evolutionary economics. Once you understand this theory, all other theories, in my mind, collapsed. It just made sense because everything has a cycle to it, right? There is no linear future. Only our minds deceive us that the progress is linear, but there's cycles involved. And when I read this book and started learning more, and I joined the Long Ways Forum, it just, wow. And actually, I thought I was looking at a forecasting model, but little did I realize it was a social cycle, right? These cycles that ever increasingly move upward, right? It's not linear. So Marxist and Keynesian and other theories about how the economy moves forward, stop making sense. Now, one thing very quickly, you'll see a lot of us will acknowledge a tip of the hat to Nikolai Kondratyev. And the story is, and it's on my website too, there's a picture of him. And the reason being is that when he was studying, he was a Marxist economist for Stalin during the 20s, and he was observing the capitalist system. And what he brought forth to Stalin is that it would crash. That was one of his first great calls. But his second great call, that it would come back stronger, did not fall favorably to Stalin. And he was sent to Siberia, where he later died. It was actually shot. This is the theory. So here's a man who discovered evolutionary economics and laid the foundation for a lot of us to push the theories and what we've accumulated since then. If anything, the data only confirms that we are now ending another Kondratyev cycle. So I hope that makes sense of why a lot of us allude to him in our work. So here's the 3 cycles that he observed, and right now where we are. That K4 peak, you see 1, 2, and 3, that peak was actually in the 70s. And this cycle is set to bottom sometime in the 2030s, right? It's powered by technology, productivity, improving standard of living. On the down wave, the financial industry or the economy becomes financialized. Too much speculation takes hold because the price of its product credit falls, and it causes Ponzi finance, which causes a hard landing, and then the cycle. And then we go through a purging period, right? So to simplify, the Kondratyev cycle is on average 55 to 80 years. It's not an exact cycle. This one has been extended because we know we live in a fiat monetary system, but technology drives it. In the 4 seasons, we have spring, summer, fall, and winter. Spring began in 1946, lasted about a generation, and this is where the economy comes booming out after World War II. All the debt, the deleveraging was done, consumers were flush with cash, credit is almost at historical low levels, and what's actually driving economic growth is real income growth, real productivity, and real wealth generation. Then it overheats. That was from 66 to about 81. And that also becomes, as Dent articulates, all these baby boomers coming into buying homes and drove up commodity prices, and it took a while for that to adjust. We've had fall, and this is the down wave, and fall is the actual falling price of credit that causes Ponzi finance. And if you think about that, the adoption of this type of technology simply comes about because it becomes cheaper, better, and increases the adoption rate. So if you understand that concept, then it makes sense why the financial industry does so well in the downwave, because its product, which is credit, becomes cheaper and it allows people to leverage. Now, we've just leveraged from the zero bound in 2020, 2021, which has never happened. So it's over. We can confidently say that economic fall is over. We're now observing is economic winter, knocking at our door. And it looks like that is emerging. An economic winter is a deleveraging, bankruptcy, a restructuring of the economy back to so we can launch economic spring. And economic winter usually takes a generation, and it could be anywhere from 15 to 25 years. Hopefully that makes sense. Now, there are a lot of books here that if you want to delve into this much further, these are probably the books I recommend. The models, after 10 years in the investment business, the All-Season Investor, I found out later, is the only book that actually has a Kondratyev model, and Martin Pring actually designed the theory, and it's a great book, and I've just Canadianized it. The other books deal in the technology. Some are regarding the debt, other things about cycles. Some people prefer the fourth turning. By the way, the second and fourth turning and the Great Wave are not part of the Kondrativ cycle, but they're important. They overlap. So if you want to know more, these are books should be on your reading list. Now, I list them on my website in resources if you want to educate yourself, and I'll be providing courses to teach the Kondrativ cycle. The most important thing that I learned very quickly, which was missing out there, is that some economists and money managers were only focusing on one aspect of the long wave. And that is, some are just on the technology, for example, Carleta Perez's book, but there is part of a social cycle, deals with that. And as time goes by, it's Chris Freeman's excellent book talks about the technologies and how it changes our world, right? It's always technologies that power and rock our world. And I thought, why not take all these together and build a model? And that's all I've done, right? So I'm just standing on the shoulders of giants, from Kondrativ to Martin Pring, Carleta Perez, Chris Freeman, and so forth. There's so many books on the idea, and to build a model on all of them, because it's a social cycle. And this social cycle is so powerful. It's what leads the future. And what I mean by that is you determine the future. It's not some elites that want to create a new world order. I mean, that's going to fall apart. Ultimately, it's society that decides, and they're going to decide a system that serves them, not elites. If anything, the opposite is true, right? Revolutions start from the bottom. Technological revolutions start from the bottom. Political revolutions start from the bottom because the system doesn't work anymore. So this thesis about, the fourth industrial revolution is based on elitist view to sustain power. Ultimately, it's the Kondrativ. So when I talk often or articulate about the Kondrativ cycle is more powerful, I'm alluding to you and the 8 billion people on the planet that are consuming and innovating and wanting a better standard of life. This is the power of the long wave. Now, if you look at the current cycle, this fourth wave is being built on this internet revolution that started, well, we're in our third decade now, actually going to our fourth decade, which it should be complete by 2030. And that really is this information revolution that is just disrupting the status quo. And by the way, it's laying the foundation for the blockchain, Bitcoin, revolutions, right? Because the ability to interact with anybody in the world, exchanging information or money is there. What's amazing is that as of today, we still have 1 million people join this information revolution, and mostly that's coming from Africa. Pretty much the developed world has adopted this technology. Asia is coming on, and Africa. So, what does that world look like post-2030 when everybody has access to this vast information? If this fascinates you, I recommend a book called The Printing Press, An Agent of Change. And that book, articulates about when the printing press came along, that technology, along with the Renaissance, it disrupted power, but it caused civil unrest and wars because the old paradigm is collapsing, right? Progress is never linear. There's always a disruption to the status quo, and Schumpeter always alluded to this. Marx only lived in one cycle, and he believed the elite will sustain their wealth, and that never occurs. Any empire eventually collapses, countries, domination of the financial industry. There's always creative destruction, right? That's the hallmark of capitalism. So if that does fascinate you, I highly recommend it. So remember, again, the takeaway is this internet revolution is laying the groundwork, and then where Bitcoin and other currencies are able to transact And that is profound. 1 million people. I find that fascinating. This is the work of Carleta Perez, and she talks about these are more of the technologies and the 5 surges of revolutions. And you can see that the arrow there since 1971, it's about halfway because we've not, completed that. That should be done within the next 10 years. And then these other technologies, which we'll allude to, are building upon it, right? So technologies are built in the down wave. Once the old system collapses, the new technologies take over and power. And this is where futurist technology futurists miss the mark in their thesis. But I agree with them. The thing is they have to understand is that that the old system has to collapse before society is open for change. Most people don't want change. They don't like change until it's forced on them. So it's always important to realize that change has to come from disruption, but the old system does not work. Okay, now, here's the problem, and this is really because this is really centered for Canadians. And you can see here that green line, and that really you can see started about 1981, the deregulation of the financial industry. We have too much debt and not enough GDP. And eventually that amount of unproductive debt will have to be restructured, collapse, bankruptcy, maybe a new currency evolves on the other side, but it's unsustainable. I mean, anybody thinks that real estate will go up, the economy goes up, or the system will continue. It's mathematically impossible, especially now with interest rates rising. So this is what will end the fourth wave, is the amount of unproductive debt. And all central banks have done is really kick the can down the road. Now we've run out of road, and I believe that this cycle is now, will be forcing a change, but that's later on. A lot of individuals have read this book, The Sovereign Individual, came in the late 1990s. And it's really, it's an excellent book because it deals with the economics, but it talks about what is emerging. And a lot of us that were on the long wave forum for a long time, I participated from, I think it was 96 to 2012. We're debating what does the future look like? And this book really encapsulated the idea, but this was before, Bitcoin, blockchain, before 3D printing, solar, artificial intelligence. I mean, all these technologies that have come on board are only confirming that this will be a decentralized renaissance. That is, it's the empowerment of the individual. Okay, now, here's a part of the story that you can understand more on my website, but I worked in the industry, as I mentioned, from 1989 to 2012, and I left the business simply because I didn't realize at the time I succumbed to traumatic brain injury. That's another story you can read about there. And I left because I wasn't happy regarding managing capital. Did well, but just saw it was going to end badly, as we're seeing now. And I just walked away from it completely. Wasn't interested, wanted to maybe work in another field. And I had pretty much enough because it has become corrupted and will collapse. But it was the discovery of reading this book on energy that changed everything. And what I mean by that is I feel like Michael Corleone in Godfather 3, where all of a sudden I thought I was out of the industry, and then everything clicked. And I was like, oh my God, this makes sense. That's why cycles are as what they are. It totally makes sense that the long wave, the credit cycles, the business cycles, like I had to go back and reread, anybody who's read knows the Dow theory. I had to go back and reread all that because all of a sudden it made sense. If you understand the concept of energy and you measure energy and you know the components of the economy or an industry, you can forecast more accuracy or more accurate. And so that started me on a journey of, okay, this is going to end when? And I started the process. And again, I started reading a lot of books and so forth. So during that time, this book came along, and the next economic disaster. And one of the things I looked at was, what causes them and the amount of private debt. And if you can see here very quickly, I built this chart and as a measurement of risk profiles in terms of when does it end. And Richard Vague talks about usually about acceleration above 150% is that when it could cause an economic collapse. And we saw the level in 29 for the US, Japan at its peak, and you can see Canada has exceeded that, which is very concerning. Now this is a measurement of risk, not timing. And Peter Kundo used to talk about that because sometimes value investors would underperform for a year or two until the economy finally corrected their thesis. So it's a warning, right? It's a warning that a collapse is coming. This chart here, what I just decided to see if it followed a pattern, and it's pretty spooky that it follows Japan's peak before it collapsed. But that blow-off that we saw in 2020 was just the COVID-19 final debt splurge that caused, unfortunately, a historic credit bubble in real estate in Canada. Now, is economic winter inevitable? And as you can see with this chart, this is GDP, Canada's GDP, annualized, and constant dollars, of course. And there you can see the growth. You can see the secular slowing. All that debt is not creating enough GDP to sustain all that debt. So when does economic winter arrive? And the first chance arrives is actually next year in 2024. But each cycle, business cycle, only assures we're that much closer. Because with interest rates at the zero bound, government's indebted, private sector indebted, it's impossible to continue. Now, during that time also, I was building, how far could they kick the can down the road? And this chart came along, and if you read Dent's book, Why Real Estate Never Came Back, this is the initial demand. Typically, I know that's challenging today, but typically 29-year-olds come into the market, and they are causing new demand. As you can see here, what I want to do is get all the data and splice it up, going back as much history as we have in Canada. And I put this chart together, and you can see the peak here in 60, 91, 2022, which is last year, and 2048. Now, this will be updated as the population change, but it's the median. The future is the UN World Population Prospects. And it's not an exact timing, but it gives me an idea of when to expect a peak. And we have this millennial peak between 2022 and 2024. Now, notice that second one at the bottom. This is supply, and that's simply because Canada is aging, and it's the front line of the baby boomers. So we have this demand-supply issue that are going to cause downward pressure on real estate prices in the future. Now, those that believe immigration is going to be the savior, you have to remember when you go into a hard landing, historically, immigration collapses to zero. Unemployment skyrockets, and governments will have to deal with people who are out of work before we let immigration in. So I wouldn't assume immigration will continue. If anything, I'm forecasting that will collapse. Okay, here's mortgage credit growth, and this is the energy model, as I say. And if you take a look at it, this is the recent data, you can see it peaked in the 70s during rising interest rates, and but the demand was there because it was the baby boomers. But no, as we're having lower highs, and even this final blow off in 21, mortgage credit growth is only 5% as of March 2023. Now, that last bubble we saw in 88 to 89 collapse into the early 90s, but more than likely, you can see this is headed towards zero. And so sometime by the 2030s, at the absolute latest, we'll be deleveraging. especially if you come from the zero bound, the ability to leverage is almost non-existent moving forward unless wage growth is there. So you can see that we're approaching the end. Okay, why is that important? And I'll get to that later and how this all ties in together. Now, this chart should really worry somebody because this is, or everybody in Canada, and we look at prices here of ratio of home prices to wages, and you can see it stayed within a band up until 2001, 2002. And we have this blow off, another perspective here, relative incomes. Prices historically are within line of incomes and inflation. That's one of the things that John Templeton told me. And that will correct whether we like it or not. And unfortunately, in this great city that I've lived all my life will be impacted dramatically. So what is the impact to Canada? We're going to find out. But that is a measurement of risk. The amount of debt is a measurement of risk. That we've leveraged from zero is indicating risk. So this model is very simple. I simply took history and looked at, real estate prices fluctuate in and around the inflation rate. And this is what John Templeton said, never purchase a home more than the cost to rebuild it. And that's it depends. Many places 60 to 80% lower. And you can see most of the rise since 2001 is Ponzi finance. That bubble that I bought at the top in 89 looks like nothing compared to where we are now. So whether we like this or not, most people will ignore it. Most people won't believe it. Most people will say that it's different this time. That's your choice, right? I can't force you. You're an adult. I just am warning people that this will end badly because the convergence cycles are pointed to that end. This chart is great, and I constructed it as believe it or not, as a young socialist Marxist in my 20s, simply because my parents were immigrants and hardworking laborers, and I was concerned for them. But one of the things I discovered that this is Marx's life, and the Bitcoin crowd, gold crowd, look at this chart very carefully. You can stop it. Do you notice the price level during his lifetime fell? Do you notice that the average annual real earnings of those people who lived in UK actually increased? That was the Industrial Revolution. That created real wealth. So we had a sound monetary system where prices became cheaper and incomes were rising in real terms. That's what creates wealth. If you're concerned about the average person in poverty and the middle class, you have to first think about a stable monetary system, and then technology to increase the wealth and the earnings, and as technology does, drive the prices to the end user. This is how wealth is created, through productivity, not currency depreciation. Here's the Canadian dollar. And a very small group of you understand what this means here, but here's the Canadian dollar since the inception of the Bank in Canada, 1935. And you can see now, up as of recent, it's lost over 95% of its value. And it's still following that exponential trend line to zero. There, I've put the breakdown of the Bretton Woods system. 1981, the financial renaissance, when the fire industry became dominant because their product became cheaper and we deregulated. And Canadian stagnant incomes, real incomes, occurred in the early 80s. And what mostly the baby boomers have done, since there's so many of us, is they've used debt to replace their stagnant real incomes to have a lifestyle that is not sustainable. And this is the problem also with a fiat monetary system. It forces people to move into the finance industry, which, as you can see, has caused Ponzi finance since 2000. And that appears now it's in the process. This is Toronto home prices, and I'll take a look at 1989 and after the correction. And if you want to know historically, home prices are 2 to 4 times income. You can see this Ponzi bubble started around 2000, 2001, and the peak was last year. We're at levels that are simply not sustainable. And yes, it will correct to that level dramatically lower. If tech stocks, which are speculation, aren't leveraged, will correct that much, why wouldn't home prices? I know what you're thinking, but that's the reality. It's always corrected. It will correct to there, and it will be a jolt to the Canadian economy. But it will address the issue about switching to the real economy, and it will be a painful period of 15, maybe 21 years to fix all that. Yeah, we're going to have to cater the real economy again and the finance industry toward the real economy. And that's not easy. That's why it takes a generation. But the good news is the technology will be supplement the old system that's not sustainable. Okay, theories. There's a lot of theories of which revolution we're in. And I will just address 2 of them. One is the invasion of the elite, which is the fourth industrial revolution. The problem is they don't factor in social cycles, and they're ignorant of how things work. But in that fifth group, that's where I see myself, right? Neo-Schumpeterians who look at technology, economics, policy, culture, and social progress, right? It is what's in the best interests of people. Neo-Marxists are concerned about the political group and the changes. And the long wave theorists, I combine this, which pretty much what I do is combine models and how we get there, right? So you can see why I'm in that small group that is articulating this agenda. WAF will collapse in time. The public does not want anything to do with it. If anything, this technology empowers the individual. We don't need big companies, large governments, top down. That's archaic and sclerotic to the real economy. Okay, here's the long ways, and we look at the cycles. These are 3 cycles that led to the downturn in the U.S. in 2008, Japan in 1990, and in 1929. That the long wave peaked in the 70s, and this is why, again, it's called a long wave. That 2022, 2024 is the real estate or cousinate cycle, and 2022 is the business cycle. Now, they're all heading down, and that is now suggesting that a hard landing is on its way, and there's, what can we do? But here's the most important part, and this is why I wanted to address the Bitcoin crowd, is that you're aware of the system is coming to an end, and we're trying to make changes, but the public is not ready. And I will tell you from experience that you can put the information out there, but the public won't change until it hits them in the face. So my suggestion is to articulate the transition that's coming. Bitcoin, cryptocurrency, whatever, there are some that are competing, but people are focusing on this is probably the leading edge. And the most important thing is that once the collapse comes, they'll be open to the new ideas. They'll be looking around, right? Like in the 1930s, there was a political revolutions around the world looking for how do we fix this? And governments were the solution. But we know now they're the problem. So they'll be shrinking in real terms, and so will the financial industry, simply because they were dependent on inflation, and that's not sustainable into the future. So articulate the message and wait for the audience to come your way. And I learned that in 2000. So in 2007 or 2005, we saw the peak in real estate and said this was going to impact. We saw the financial sector peak. We put it out there. And, my own business tripled 2008, 2010, simply because I was focused on preserving capital instead of being caught up in the speculative boom. So the same thing is here, right? I'm in a defensive mode. I've articulated to the clients that I have, we're in a defensive mode because the economy will come toward us. We can only put out the information. Don't expect them to accept it. All you can do is educate them, step away, and then when it does come in your favor, then you'll have a willing and listening audience for what's coming. So again, here's the challenge. All that debt is unproductive and unsustainable, and it's leading to a hard landing. What that leads us to is, if you read Ray Dalio's book, The Big Debt Crisis, is I've put labels on his chart here from 46, and that should peak, was it last year, to 2025, and we have deleveraging. And that should last until the end of the 2030s, and the Kondrativ fifth wave should begin in earnest around 2040. But we'll see. We'll have to see when the hard landing does occur. There's a great parable if you head over to my Substack account, and there's a lot of free information there. If you want access to the models, it's there. But I just put up this parable and the dangers of credit inflation. I think you'll find that very interesting. Okay, now, this is for the young, or let's say the young adults and people who have a bleak view of the future. My suggestion is don't. If you take a look at this chart, I know that there's a lot of doom and gloom put out there, but what I did is take the amount of worldwide patents and divide it by the population, and you can see it's growing exponentially. So while birth rates are doing this, patent growth is in this direction. There are so many technological revolutions that are coming. It's going to change our world, and these Malthusians are going to look like fools again. This, by the way, could also be the last long wave cycle. Now, this sounds kind of extreme, but I would say that technology is changing us, and Bitcoin is part of that. But so is 3D printing, so is artificial intelligence, so is the information revolution, because collectively our knowledge base is exploding. And why I say that is 10 years ago, I met this gentleman, that's myself and Ray Kurzweil. Now, I'm interested in technology, but I just asked him a question, and hypothetically, so I asked him, how soon before we have the replicator? And if you don't know, if you haven't seen Star Trek, it's just we arrange atoms so, like in the show, we can produce an abundance of anything we want and not have any kind of waste. And I thought 200, 400, 500 years from now. And he said, quite factually or confidently, probably it's going to take the remainder of this century. Now, that's a pretty profound statement to make, but think of it. It's a converging of technologies that are basically coming together in a way that changes our world, and they are in this part of the cycle that can lead to that. And that is nanotechnology, we're there, additive manufacturing, 3D printing, we're there, molecular assembly, that's just started, advanced materials, scanning and sensing technologies, we have that. Artificial intelligence now is taking off, and decentralized points of energy, which is, again, they are in that process of now converging to propel the next wave. So I've articulated this simply because it's to provide factual hope for the future. We're innovating an enormous amount of these technologies, but the long wave articulates that we have to go through the purge and the cleansing, so to speak. Now, if you want to know more, this is my website, the economiclongwave.com. I get into details about decoding the long wave, services, If you wanted to subscribe to the model where you could work with your advisor, if you want to read some books that are there, we'll be doing, one of the things I'm excited about is that I'm going to work with a group of individuals. Already there's some interest, and we're going to start off an experience, a mastermind group, right? That group is there to propel society to the next point, to get us to this point. I'll provide the input of the long wave, where we are in the business cycle, so you can increase your chances as a business exponentially, right? Where to avoid, where we're going, where are the profits, where are the opportunities, where are the dangers, right? We don't ignore it. And to pull people that, want to change the world for the better. I'm not concerned about the future, but I actually want to make it better. So you can go there, and if you want to contact me, you can do that directly and be part of that, because we're going to have an initial discounted group to kind of work out the details, but I have the framework of where we're going into the future. Also there on the Substack account is the long wave tactical asset allocation model. It's really simple. I've just used the Martin Pring's model, Canadianized it, and it just takes the allocation, where we are in the business cycle, what are the risks, and we increase cash as the business cycle ages, and we deploy the cash in the bottom. So it's doing what we want to do, buy low, sell high. And, it has a very high cash position right now, and there's a reason for it, because the economy's turning down, right? We're trying to avoid losses. So if you want to subscribe to that, it's on this Substack account. Now, one last point I want to cover here. This is the technologies that powered the past, and where you can see where we are now and what the future is. So there is some converging technologies, but the most important thing, as I mentioned before, is these decentralized technologies. And going back again, do you see when I speak about the decentralized renaissance, it is Bitcoin and these cryptocurrencies as they go through creative destruction, but it's all these other technologies that are disrupting the healthcare system, the education system, the energy system, decentralized energy, decentralized production. I just don't see over the next 20 years anything being produced outside of locally, simply because that's where the productivity is. We can't much do about GDP or demographics, but we can do a lot around productivity through a decentralized economy where we're creating wealth, production, manufacturing locally. The cost effectiveness is exponential. So that's where all this is going. And then you have the internet, and you have a monetary system there. That's what's driving the next wave. And it will be powerful. Understandably, that's hard to see for most people, but this is historically what has happened, right? We are creating, you're creating, a lot of these people who were at the conference this weekend are creating that world. And it's happening around the world. So, in summary, welcome to the decentralized renaissance. And really all that means is that the sovereign state is coming to an end. The WF is just a belief that we should centralize power, but why? If you can be empowered to prove your health dramatically, if you can have production locally, if you can have consumption, if the exchange of monetary and information, we don't need a centralized power. If anything, these technologies will lead to probably a democracy. I mean, this elected representative democracies probably will succumb to a direct democracy, which just basically we get to vote on how we want things to occur. Since our elected representatives aren't serving our interest anymore, our society's interest, a direct democracy, because the technology is there to implement that. So, in summary, because I didn't want to make this too long, I hope you understand that what we're creating here is and when I mean we, it's collectively the public around the world, a decentralized renaissance that the manufacturing, consumption, production, monetary systems will be decentralized, and there's not a need for centralized power. It is crumbling, as we see, as what happened with the Soviet Union. Didn't work. Same thing. Now, does that mean the breakup of Europe, United States and Canada? Some people believe that. Some economic forecasters believe that it's a breakup. Maybe that will happen because there doesn't seem to be an agreement of what the future looks like. I can say with certainty it won't be centralized. But how does it look? Do we break apart the powers provincially or state-wise, the United States? Do we eventually move to the direct democracy because it's much more efficient and empowers the individual? That is what we're going to see as a political revolution emerges. Anyways, if you have any questions, I hope this video puts it all together. This is what I love about the long wave. It puts all the pieces of the puzzle together, right? So Bitcoin is a part of that. So is gold. I'm not here to discount that, right? I believe gold will be the anchor and Bitcoin's the money moving forward, and there'll be a transition only because gold will provide the confidence initially as you lose it, as is lost because the system is failing. So understand that. I'm not regimented and argue one over the other. That is an argument I believe needs to stop, but that's my opinion. But the long wave in the Kondrativ cycle are seeing this is coming to an end, and these technologies will pick up the baton, so to speak. But we go through a period of creative destruction from, well, all systems that we've known since World War II will fail and will build, right? We fixed the problems of the last Kondrativ cycle, and evolution then takes forward and will have a massive boom post 2040. So if you have any questions, you can contact me directly on the website. If you want to know more, be part of the mastermind group, or if some parts weren't clear, I will be launching more videos to articulate, educate the long wave as we go through the cycle. Thanks for your time, and I hope this was informative and finally articulated the message that I want to. We're going to get there, but it will be a bumpy road along that route. Thanks for listening.